Good morning, everyone. Good afternoon, evening for those who are not in our time zone. Welcome to this very exciting session hosted by CGAP and IFC on the need for gender disaggregated data in the financial sector. My name is Anushe Khan, Senior Operations Officer working on banking on women and financial inclusion at the IFC. It's my great honor to be moderating this very timely session today with an exciting lineup of experts in this area. Over the next 60 minutes, we'll be discussing the crucial role and benefits of gender disaggregated data in advancing gender equality through access to financial services. We'll also explore recent findings from IFC's new report, her FinTech Edge, and CGAP's work on supply-side gender disaggregated data in the financial services sector. If you haven't already looked at these reports, do give it a chance. We'll be posting this on chat very soon as well. In terms of the agenda, we have a packed one and hopefully a very interesting one for you because it certainly interests us. We have Haocong Ren from CGAP kicking off the conversation. We will then have a brief overview of IFC's recent findings on how fintechs are serving women customers and can actually serve them better, including the use of gender disaggregated data. And that will be presented by Jorge Godoy from IFC. He's an engaging speaker, so please stay tuned for that particular bit. We will finally have a fireside chat with Jessica Schnabel. She heads the Banking on Women business in IFC, and Tatiana Alonso from CGAP, who's the Senior Financial Services Sector Specialist. We would love to hear your questions. We keep posting it during the session, and we will get to it in the next Q&A session that we have planned. And finally, we will have closing remarks from Yasmin Bin Humam, who's with the CGAP. She's also a policy sector specialist. With that, are we ready to dive in? I hope so. But before we dive in, certain housekeeping rules for us all to consider. First one is please keep your microphone mute. Please keep your video turned off unless you wish to speak. And finally, please liberally post questions on the chat as we all speak and have this dialogue. We will try and answer as many of them during the Q&A session during the end of the 60 minutes. So with that, it's my honor and pleasure to invite Haocong Ren, Lead Financial Sector Specialist and Pillar Lead for CGAP's Policy and Investment Team, to provide the opening remarks. Haocong, over to you. Thank you.
Thank you, Anushe. Welcome, everyone. I hear a little bit of echo. Can you hear me well? Okay. Welcome, everyone. This is my fourth week on the job as the pillar lead of the policy team at the CGAP. Well, you all know gender has long been our core to CGAP's mandate and it continues to be a priority. Today, we are very excited to jointly host this webinar together with our IFC's Banking on Women business. We're not only excited about what our speakers have to offer, but also the insights from our diverse audience. I wanted to start off by sharing a story from our IFC's colleagues' work under Banking on Women. Bertha Suri and her sister from Dominican Republic made all their daughters' dresses at home. They got so many compliments, so they started to make more to sell to a local store. And as many women entrepreneurs around the world, they had difficulties secure financing to grow their business until a local client bank of IFC extended a loan to them to secure a shipment from overseas for imported fabric. That enabled them, their small business, to work with quality fabric and sell to broader market and stay competitive with large manufacturers. Stories like this are our inspiration. Well, we also know there are many women out there around the world who have not been able to benefit from traditional financial service provision to improve their livelihood and agency because of a variety of reasons, whether they don't have a credit history, or they don't have the right to own property in some countries to pose as collateral, or simply because financial service providers haven't really realized that women customers are good customers that are good for their bottom line, or the financial service providers themselves are not equipped to tailor their product and service to serve the unique needs of women clients. So in today's session, our speakers will share some emergent evidence about fintech companies can intentionally target women clients, in particular by leveraging analysis of gender disaggregated data and tailor their product and services to serve women clients. We're looking to explore the intersection between financial sector policies and the innovation in business models by financial service providers. We are also looking to both leverage technology and the data to be able to advance women's financial inclusion and economic empowerment. So we have done some work, but there's a lot more to be done. We hope to have all of you, our partners and the stakeholders, to come along with us on this journey and stay with us until we can make meaningful advancement in women's empowerment in reality. Thank you so much. And with that, I'll turn back to Anushe. Thank you.
Thank you so much, Haocong. That was a great kickoff to this whole discussion. We appreciate it. May I invite now Jorge Godoy, Investment Officer from Financial Institutions Group, IFC, to present insights and findings from IFC's report, Her Fintech Edge. Jorge, the floor is yours. Thank you.
Thank you very much, Anushe, and welcome everybody. It is a pleasure for us to present, along with CGAP, the findings of our report recently launched in April 2024, Her Fintech Edge. For that, I'm going to share my screen, so let me know if you can see it, please. Can you see my screen? Yes? Okay, great. So basically, as I was saying, this report was published in April 2024. The name of the report is Her Fintech Edge, Market Insights for Inclusive Growth. As you can hear from the title, we were very interested in finding what we could obtain from the fintechs in the market who are serving women. If we could find out what were the main reasons for them to serving women, and if they were already finding some benefits in doing so. The report was a collaborative effort between IFC's Banking on Women, Dahlberg Advisors, and Dahlberg Research, and it was financed by the Women Entrepreneurs Finance Initiative, WIFI. So just as a general background, we have seen in recent years the rapid adoption of digital financial services, which during the presentation I would usually refer as DFS, across many developing countries, driven in part by the impact of COVID-19. From 2017 to 2021, actually, the average rate of account ownership for men and women generally in developing economies increased by 8 percentage points, from 63% of adults to 71% of adults. And you might infer that the increased account ownership is supported by rapid adoption of digital payment services. In fact, during the same time, the adoption of digital payments increased from 44% in 2017 to 57% in 2021. However, and it's the case with many of the services that are also involving women, the disparity in access to and usage of digital financial services between women and men is still persistent. A study carried out in 28 countries to determine how was the digital financial services reaching out to women, discovered that there is still a gender gap in digital financial services of 8%, and in the adoption of services that include payments, borrowing, insurance, financial planning, and investment services. And gender gaps in access to and use of digital financial services, you may assume correctly, these are linked to gender gaps in economic participation, in financial literacy, digital literacy, and social cultural norms. So if digital financial services are not carefully designed and rolled out, this could actually exacerbate existing gender inequalities. For example, in low and middle income economies, 66% of women use mobile internet compared to 78% of men. We're talking that 785 million women remain unconnected. And what happens with this issue and what is the bottom line of this? We will see that we still have 740 million women without access to an account from a financial institution or a mobile service. So what led us to launching this report, and what was the main objective behind it? As I was saying, despite the advances in digital financial services to change the dynamic for women's financial inclusion, there are still barriers. Fintech firms, which I will refer as fintechs during the presentation, are believed to be better positioned to bridge this gap. However, to date, we found there was limited research that could quantify the degree to which fintechs are trying to deliver on this promise. And for this reason, IFC embarked on this study based on a survey of 114 fintechs across 17 countries to fill these knowledge gaps. For purposes of this study, fintechs mean digital payment providers, digital insurers, digital-only saving providers, and digital lenders. We are excluding traditional financial institutions such as banks, microfinance institutions that also offer these services. And the questions that we launched through the survey wanted to explore the extent of women's representation within the fintech's portfolio and the factors influencing this representation. So as you can see, research questions including, do fintech firms actively target women customers? If so, what strategies do they employ? And what is the performance of women customers in comparison to the fintech's overall portfolios, considering metrics such as loyalty, customer lifetime value, and default rates? So going to the main key findings, we had 6 key findings out of this report. And the first one is basically one that is not surprising. Many fintech firms report that women constitute less than 25% of their customers, with a lower representation among business customers and lending-focused fintech firms. So from the circles you see on the left, and we're going to split this analysis between 2 kinds of fintechs, the one who provide lending services and the ones who provide savings and payment services. So from the lending fintechs, the ones you see on the left, 63% of them report that women comprise less than 25% of their business customers. The results are a little bit more encouraging if we ask them about the retail segment, and we found that 27% of these fintech lenders report that women comprise less than 25% of the retail customers. What happens with the other types of institutions, which are the savings and payments? And these institutions actually had a little bit more promising results. Among these firms, 36% of them indicate that women represented less than 25% of their business customer base, and 19% of them indicate that women comprise less than 25% of the retail customer base. The next finding is particularly interesting for our discussion today. And we went on to discover if fintechs were actually collecting data, sex disaggregated data or gender disaggregated data, and if data is collected at all and used. 59% of the firms that we interviewed collect sex disaggregated data, and I will refer to this term during the presentation, as it is the way it was written in the report. Few use it, less than a third tailor their products and services towards women. So even though sex disaggregated data is critical for financial service providers to size the market opportunity, understand customer behavior, and identify gender-based differences, we found that even though the firms were collecting the information, they were not doing much with it. And of course, and as I mentioned earlier, there are distinct barriers, needs, and behaviors that influence women's use of financial services. And the only way, and you would believe it is logic to believe that to address these barriers and socioeconomic factors, financial providers can derive benefits from tailoring their financial and non-financial products and services. And that would start particularly with doing the sex disaggregation of their portfolios. From the image, we can see that the majority of fintechs collect the information from customers during the onboarding processes, but only about a third leverage this information to tailor their marketing or products towards women. It is particularly interesting to see that those companies that we surveyed who answered that are not collecting the data consider, almost half of them consider, that gender is not an essential factor in decision-making, which the next finding will probably bring down this perception for them, and this is what we want to do with this report. Because actually, key finding 3 says that women are good fintech customers. And the survey findings shows that there is a strong business case for fintechs to serve women customers. The majority of fintechs that we interviewed or we surveyed consider that women to be more loyal, less risky, and more or equally valuable as a customer than men. For example, the survey found that 69% of lending fintechs believe women's loyalty is greater than or equal to that of men. Also, fintechs believe women customers have better payment performances because they have greater financial discipline and a greater aversion to defaulting payments. And this is something we have been hearing ever since we've been dealing with microfinance services and other types of services for servicing women. In fact, 58% of lending firms consider that women's default rate is lower than that of men, and 40% believe it is equal. Also, 49% of lending fintechs believe that women customers' lifetime value is higher than that of men's, and 43% believe that it is equal. There is an important finding, which is key finding number 4, and basically it is summarized as 63% of the fintechs who customize their products and services for women often observe higher customer lifetime value. They also could observe a higher cost of acquisition. But despite this fact, actually, they still support the fact that women customers in general have a higher lifetime value and therefore provide more higher returns and higher revenues for their companies in general. And these are just some of the findings. As you can see, we were moving from if fintechs collect data or not, if they use it or not, why they did not collect the data at all. Then the case for, or the business case for doing so, because we found that fintechs believe women customers in general to be less risky, more loyal, and provide higher returns. But the fintechs, when we surveyed them, have needs. And they said, okay, if you want us to do this, if we want to serve this market, what do we have to do as a group, as an ecosystem in general? And basically, to target women intentionally, the report highlights that fintechs need knowledge, research, financial support, and technical assistance to fully capture the women's market. Specifically, and you will see, we will share this presentation later with the crowd, but you will see that specifically fintechs express needing market-specific knowledge of women needs and market size, pick best practices, and want to see a well-evidenced business case before going forward. Let's hope this report already establishes an evidence business case for them to do more gender disaggregation of their portfolio and keep servicing women with tailored products. Finally, as a key finding number 6, the ecosystem is important. Ecosystems can accelerate fintech firms' progress in strategically serving women by providing tailored support based on market conditions and the firm stage. And you will see through the report that we could gather what can the ecosystems provide in firms that are based in low economic gender gaps or in moderate to high economic gender gaps. Important to notice that these descriptions are based out of the gender gap report from the World Economic Forum. And you could see that depending on where these firms were located, if they were on a low economic gender gap country or a moderate to high economic gender gap country, the requests were different. Generally speaking, they were usually asking for financial support, non-financial support, and the ecosystem building, as I mentioned previously. Just to draw down on a case and not to take too much time, we have one of the important cases, which is actually highlighted during the report, and this is Asante Financial Service Group. This is a credit-led neobank that supports Africa's growth through the provision of financial services to growing businesses. Asante's desire to serve women customers stems from a mission to improve women's well-being, strong investor interest in gender sensitivity, and an awareness of the commercial potential of the women's market. With a strong gender agenda in place, its board has mandated that the company targets a 50-50 split in the representation of male and female customers by 2025. This is driven by robust gender-disaggregated data collection and analysis. With this, the firm identifies a clear commercial case for serving women, focusing on default rates and customer lifetime values. Asante plans to use such data insights to refine credit assessment processes for new products. We have another case which I will invite you to read further in the report, just not to take too much time for my next speakers. But basically, the main conclusion we want to draw from this report is that the results of the study provide emerging evidence in favor of fintechs serving women intentionally through business strategies informed by analysis of gender disaggregated data. By embracing these practices, fintechs could capitalize on the under-tapped women's market and add to their bottom lines while contributed to greater financial inclusion. Thank you, and we will respond to Q&A during the chat. Thank you very much. I will pass on to Anushe.
Thank you so much, Jorge. That was really enlightening, actually. Every time I hear it, it brings back and reaffirms some of the experiences that we've had with discussions with fintech firms as well as financial institutions. And as we've seen that while fintech firms collect sex disaggregated data, only 1/3 of them actually use it to tailor their products and services. And I think that's a great kind of segue into the informal conversation that we're about to have with Jessica Schnabel, Global Head of IFC's Banking on Women Business, and Tatiana Alonso, Senior Financial Sector Specialist at CGAP. We're really going to be talking about the need for gender disaggregated data across private and public space. This is just Jessica. Tatiana, welcome. May I start off by asking each of you to briefly introduce yourselves, your organizations, and what you work on? Jessica, appreciate if you could go first. Thank you.
Sure. Thanks, Anushe. And thanks, everybody. This has been a great conversation so far. I've been looking at the chat and really appreciate the engagement. As Anushe mentioned, Jessica Schnabel is my name. I look after IFC's Banking on Women business, and that's really the vantage point that I'll bring to this conversation. IFC, as you know, as part of the World Bank Group, and within the IFC, in the financial institutions group, we invest in financial institutions of all kinds, including microfinance institutions, universal banks, leasing companies, and other kinds of NBFIs as well. In the Banking on Women business, which has been around since 2012, we have been investing for, 12 years now in financial institutions on a commercial basis so that they see the business case and opportunity to invest in women. And for many years, this value proposition was focused on the SME segment. So we were investing in and providing expertise and research and data to banks so that they invested in women-owned SMEs and provided all kinds of financial services. Over the years, that business has grown to really invest in financial institutions for the full suite of financial services that women may need, such as housing finance, supply chain finance for all business sizes, climate-related finance, and the like. Over the years, we've invested over $7 billion in financial institutions in emerging markets, and have either invested or provided advisory expertise to over 260 client financial institutions in 75 countries. It's a pleasure to be here.
Thank you. Hello, everyone. My name is Tatiana Alonso. I think I hear an echo. Is that correct? Is there anything I should do on my side to, shall I continue? Let's see if it works going forward. Right, so Tatiana Alonso, Senior Financial Sector Specialist with SIGAP. For those of you who are not familiar with the institution I'm representing, SIGAP is an applied research center, sort of think and do tank, made up by 30 donors from all over the world who work on development. And SIGAP is hosted at the World Bank. Of course, World Bank is one of the main of our funders and members. And we focus on financial inclusion. Our mandate is to make sure that financial services contribute to a more stable, resilient, equitable, and of course, inclusive world for everyone through financial services. At SIGAP, I lead a project, a 4-year project on supply-side gender-disaggregated data. So we are really trying to think about how this data can really ignite a virtuous circle whereby all financial sector stakeholders are able to kind of, use the gender lens, apply it to their everyday activities, and so help ensure that everyone, irrespective of gender, can get access and good and fair conditions for them to use financial services to stay more resilient and to create new economic opportunities. So I'm very glad to be here and discuss with Jessica and you, Anushe. Thank you.
Thank you so much, Tatiana and Jessica. That was a great introduction to your institutions, what you work on, and it kind of sets us up for the round of questions that we have going. So Jessica, Tatiana, let me ask you, why is gender disaggregated data an important enabler for women to participate in the financial services sector, including access to finance to start their own businesses and grow them? Jessica, if I could ask you to go first, and then I'll ask Tatiana to follow with a response. Thank you.
Sure thing. As I mentioned, really we're approaching this from a commercial and business case angle. What is the business case for financial institutions to invest in women, and how does that relate to the absence, quite frankly, of gender disaggregated data in financial institutions around the world, or, as Jorge highlighted, the existence but non-use of gender disaggregated financial sector data of all kinds. And I think for me, the first piece that really matters is that gender disaggregated data solves an invisibility problem. And it solves an invisibility problem that is the result of systemic I think characteristics over centuries. This invisibility problem is one where women are sometimes perceived as riskier customers. They are sometimes not known. Their risk is not known. And sometimes their digital identity is not clear. And so data, first and foremost, solves an invisibility problem. It reveals credit history. It reveals payment behavior. It reveals default history, for example. Data can also solve systemic barriers, and I'm sure Tatiana will pick up on that point, where when you look at a financial system at a national level, And the goal is really universal financial access. And you realize that a large part of the population either is underserved or completely unserved. Then sex disaggregated data has a very large role to play in national financial inclusion strategies, for example. But I think the most frequent reason and use that we have in the Banking on Women business is really data reveals a business case, and a very strong one, for financial institutions to increase shareholder value, reputation, and lower risk through a strategy of financing women to drive KPIs. There are a number of ways we can illustrate that business case, but a very easy one is to look at NPL histories over years, which we do in our own portfolio. And as IFC's looked at its own portfolio over the years of investments in financial institutions and their underlying SME portfolios, what we see year after year after year is lower NPLs, lower non-performing loan ratios on portfolios of loans to women-owned SMEs versus total SME portfolios. And last year, when we looked at this data, it was a 25% difference. So loans to women-owned SMEs had a 3.7% NPL ratio on average globally in emerging markets versus a 4.6 NPL ratio for total SME portfolios. That's just one example of the very strong business case that can be revealed through sex disaggregated data.
Thank you, Jessica. Tatiana, if you would like to answer the question.
No, of course. I fully agree with what Jessica said. I think this is actually really a relevant question for our audience, because there's different stakeholders present in this virtual room, but I think that each of us, has key mandates or objectives that are related to the financial sector, serving customers, or protecting customers if you're a supervisor, or designing regulations, policies, funding initiatives that try to really support the financial sector, etc. So each of us has, these goals, these objectives, and gender disaggregated data is the most important tool today before we are able to even disaggregate more. But let's start by gender disaggregation, right, as the main social demographic trait in an individual, and therefore in a business owned by individuals or a group of individuals. It's the most important tool for us as financial sector stakeholders to continue being able to fulfill our objectives, even if we don't have yet a particular gender mandate or goal or angle. And this is so because the data takes us from views and perceptions to facts. This is what Jessica was referring to when she talks about invisibility, right? So also Jorge alluded to a lot of institutions, I believe it was even 50% of them, they didn't see gender as a priority. But then my message is, even if you don't see gender as a priority, how can you know if you cannot measure, if you cannot look into how the reality really looks like? So for those already having a gender goal or mandate, and again, many of us probably do, because this is why we're here, the case for gender-disaggregated data is clear. But even for those for which this is not the case yet, still, it's important to look at the underlying reality, because averages or cumulative figures can be very misleading. Take, for example, you can look at the figures, take credit, for example, credit to entrepreneurs, to firms, small firms. You could look at the number of loans disbursed, values associated, rejection rates, the average interest rate, NPLs at a system level, and they could look okay. You can compare to other countries. Yeah, this seems like it's a fairly healthy financial sector. But then, if you do the analysis, gender disaggregate, you find that women are consistently requesting fewer loans. They are getting higher rejection rates. They are getting lower amounts at a higher price, despite having lower NPLs. So for women, some levels of these variables are just unacceptable. They should be unacceptable, or at least raise a flag to supervisors, to policymakers. There is a market failure here. The providers are not really providing, or serving the customers, the economic agents, as they should, right? So for me, this is the biggest. I mean, it's not whether it's important or not. It is. It might not be sufficient, but it's a necessary tool. And it's important. And the more granular, stakeholders can get into this quest to really find out what's actually happening, what's true, behind the appearances, the better. So, and very shortly, I just wanted to make a note aside on two. We have two main different kinds of gender-disaggregated data. The one that's generated by the providers, Jorge alluded to this one, and this one is factual data, right? It's transactional data. It's data that's gathered at the onboarding process or as transactions take place, etc. This is what we call supply-side gender-disaggregated data, and this data is very powerful. It can really get granular and kind of provide us an X-ray or even an MRI, of the situation. On the other hand, we have demand-side data, which is mostly generated from surveys, and this one is more qualitative. It's more about the experience, the perception. So it's more about a written essay or a drawing where the person who's drawing uses certain colors, and then both are together are very powerful and very informative to really lead, and inform strategic decisions by the industry, but also supervisory and policy decisions by the authorities. Let me stop here.
Thank you, Tatiana. I mean, that's very revealing, at least for me, the whole difference between supply side and demand side and how they kind of help each other build that story is interesting takeaway, because I'd never thought of it that way. For me, we've always worked around the supply side piece. Just linking back to that, Jessica, could you give us an example? Because we know from our work on fintechs and financial institutions that gender disaggregated data helps provide better solutions to women customers, women entrepreneurs. You've kind of talked a bit about the statistics around it, but can you share a few examples of the work that's related to GDD and what that means for financial institutions? Thank you.
Sure, absolutely. And I'd love to refer back to something that you said, Tatiana. You characterized it as a market failure, which it is. And there are strategic and economic reasons to pay attention and to women in particular. There is such a huge commercial opportunity as well, though. $1.9 trillion demand, unmet demand for credit among emerging market women-owned SMEs, and those are only the ones that are registered. There's a large market that is waiting for better financial services, and the financial institutions that can provide those services are building shareholder value. And so there are these twin pillars, I think, of the underpinnings of why sex disaggregated data in the financial sector is so important. For example, I think about, as I mentioned, we're working with, over 260 financial institution clients in emerging markets. One of them in the past has been KCB in Kenya, and this is public information. I'm not revealing any secrets of our client, but KCB in Kenya years ago looked at its own portfolio. So did an analysis of its own business portfolio. So not the retail portfolio, but the business portfolio, and wanted to better understand where women and men customers fit within that portfolio. Were they using services? Were they kind of dormant clients, and so on and so forth? What they found shocked even KCB Kenya. And what they found was that 40% of the number of business customers were women. And that was an enormous number. That was a much higher number than we find. It's higher than the regional average. When they dug in a little deeper, though, they also found that a very, very small percentage of those women business customers were actually borrowing from the bank, much smaller than the percentage of men customers in the business portfolio. And they wondered why that was. And so, Tatiana, they dug into some of the customer perception and the customer experience to better understand what was going wrong. Was it that the women didn't need financing? Was it that they needed it but needed information alongside financing, or was it something else? And sure enough, there was a demand for training, mentorship, non-financial services that the bank discovered. And if the bank could solve the information problem, the education problem, then it had a way to build its own business. And so what it did is provided non-financial services, including training and mentorship and other things, to customers as a way to build the business. And as a result of what started as a sex disaggregated data analysis, the bank increased its net promoter score, or actually the women customers, as a result of their positive experience, increased the net promoter score or the reputation of the bank in the market, which leads to new to bank customers. It led to the development of these services for women led to higher wallet share. So the bank was providing more services to women customers in the business segment. And as a result, that led to higher loan revenues, of course, as a result of a higher number of transactions with these women customers. So from the financial institution perspective, there was such a good rationale for really producing and better understanding the sex disaggregated nature of the consumption and use of services. There are many others, and I think Jorge pointed out a couple in the FinTech report as well, because we wondered if this would be the case for FinTech firms. And indeed, we did find some leaders in the FinTech space that were not only collecting, but using sex disaggregated data for better design.
Sorry, wonderful, Jessica. And these are some of the clients that we've been working with over time, so it kind of gives us a sense of how they've progressed. So thank you for that. The next question is really for both of you, and I think I'll ask Tatiana to go first. It's really around, what do we know about the status of supply-side gender disaggregated data use across the world, like the different use cases that you see? And as you respond to that, perhaps also highlight some of the main challenges in collecting and using such data. So Tatiana, if you go first, then I'll ask Jessica to follow. Thank you.
Very good. Thanks for this question again. Very, very relevant. Yeah, we did actually, we posed ourselves the same question as we started with our project in CGAP, that we need to understand, what's happening around the world with SGDD. So we took some time to do our first this research. Then we visited and spoke to several authorities, and what we saw is that and the focus of our project is on supply-side gender disaggregated data. Okay. Even though we always try to keep demand-side data just there in our radar, but the focus was on supply side, which is the data that's collected generated by the providers, and then in many cases, under many frameworks, it's reported to the supervisor, and then the supervisor, the financial sector authority, cleans up the data, validates it, and then uses it for different purposes, right? And in many cases, especially in developing economies, the financial sector authority has a financial inclusion mandate, but in other cases it doesn't. So what we found is that supply-side gender disaggregated data, SGDD, is not collected in many countries. But it's even worse when we look at the usage. It's severely underutilized. So even those countries that are able to, and this is important because not all countries are able to identify the gender of the individuals. For this, you need to have an ID system that's pretty universal. You need to be able to, as a financial sector authority, you need to be able to access to that database, the ID of the civil registry database, and we've seen also that this is not always the case, so on and so forth. So first of all, you need to be able to identify the gender. But when those countries that have been able to do that, and they actually have adjusted the reporting mechanisms to actually get this data either on aggregate form, meaning, for example, imagine credit to MSMEs owned by gender, no? That's credit to MSMEs, male, female, NPLs, and male, female. This is one kind of reporting with what we call aggregate reporting. And then the other model is that you request from the providers all the data, individual by individual. And this is what we call granular data, right? Individual data. And then it's the financial sector authority who aggregates, depending on what aggregates they want to be looking at, right? So we've seen also that there's these two different models, but even for the aggregate model, which is kind of the old school one, the one that all financial sector authorities have, even if they don't look at gender, they have this this aggregate reporting for prudential purposes, to monitor risks in the financial sector, to monitor the evolution of credit, financial inclusion. They don't use the data, or they use it, but it's really to kind of tick the box. So here's a report on financial inclusion. And it's very, it's difficult to find compelling examples. Having said that, there's really compelling examples. A few, but there is. And what's interesting is that you can find examples not only on financial inclusion, so initiatives to reduce the requirements on collaterals for women, because we know women have in many countries, because of the legal framework, they cannot have access to assets, to physical assets, and therefore they cannot bring in a collateral to secure their loans. So some countries, for example, Pakistan, have taken care of that. And in other countries, there's a warranty scheme for women entrepreneurs. Other countries have come up with reduced regulatory capital requirements for women. Some other countries, for example, Malaysia, are using this data to inform extremely targeted public interventions to help vulnerable women in rural areas in the northern provinces to really be able to, get those small loans that would allow them to start their own business, right? So we see this, but it's not across the board.
Yeah.
So the main lesson learned is that really the global community needs to face this underutilization and really raise awareness about the power of this data and really develop the tools for the global community to be able to embark on this journey. And this is what we are trying to do with this project, to provide financial sector supervisors with guidance on how to build up data frameworks that generate high quality gender disaggregated data.
Thank you, Tatiana. Jessica, over to you. And I think after this, we'll probably go into Q&A if that's okay with everyone.
Sounds good. First of all, agree wholeheartedly with everything you said, Tatiana. And I think from my perspective, challenges exist on the public sector side, kind of on the financial regulatory side and authority side, but also on the side of providers of financial services, be they public or private sector providers. And the thing that they both share is that data is easier to find and easier to collect for individuals than it is for companies. What we found across the board is that enterprise data is virtually non-existent before an entity comes in and works with partners in a given country, or it is part of the financial inclusion strategy. So what we find, even in countries where they are collecting and using financial sector data, it's only for individuals and not for enterprises. There's often a lack of definition. If one asks, how many women-owned businesses are there in the country? If there's not an existing definition of what a women-owned business is it 51% ownership, 20% ownership, or some other configuration, then it's impossible to have that answer and make the kind of strategic decisions that would lead to better services for that population. So often the first challenge for both regulators and financial institutions is, what is the definition of a woman-led or woman-owned enterprise? That's something that IFC works with our clients and partners on. Number two, as we've all highlighted today, is even when there is some data collected or available, it is not used as often as we would expect for strategic purposes. And we have enough cases, enough track record and experience to know that, particularly for financial service providers, when they're using that data to design and sometimes shift a product and service mix for customer groups in a typical customer segmentation strategy, it's very, very profitable, but also has growth impacts for women customers in particular. I think, not to get too far into the weeds, but one of the things that we're working on right now is really through a WeFi funded project. So the Women Entrepreneurs Finance Initiative has launched something called the WeFinance Code, which is a large effort working with public and private sector actors in several countries around the world, exactly to increase the availability, usage of financial sector sex disaggregated data. What IFC is doing in that space is working with 90 of our financial institution clients. So 90 financial services providers. We've started with 10 and we're ramping up to 90 over the next 2 years, specifically to support their IT, MIS needs so that they can put in place a flag in the system and some strategic practices that will help them use sex disaggregated data in their retail and business portfolios to design services. What we're finding is pretty typical. Even if if banks have that in place, they don't update those flags, so the information may not be current. It may reflect a business that existed 2 years ago and not an updated shareholders list. So we're finding some challenges that we think are surmountable, and we recognize it as one of the most important things we can do as an investor in this space, because it does yield bottom line benefit.
Thank you. I think, Jessica, that's actually very insightful. And as you see, we've had a lot of questions in chat just around that, the business case, the NPLs, conversations around that, the need for putting in place a framework at a policy level, which probably be finance code and things like that would help. I think we have time for perhaps a question, maybe two, depending. So the first question, and a lot of them are actually around fintech and sex disaggregated data, but you could also bring some of your perspectives in. First one is actually, did you identify any generational gender gaps? And I think that's going to Jorge, or other intersectional gaps among women as fintech customers. I mean, Jorge, if you want to just take a quick minute to answer that question, that would be great. But Tatiana, in your discussions with policymakers and in your own report that's come out, do you see any variation in that? Do we collect data around that piece? I think that would be interesting to shed light on in terms of what is being looked upon from the policymakers' perspective. Thank you, Jorge.
Sure, Jorge, after you.
Sorry, Anushe, I cannot see the question. Would you please kindly repeat that one?
Yeah, sure. Give me a second. It's just disappeared from my chat too. 1 second. It's about it's about finding out whether there are any differences between women in terms of generations. So are there any gaps between generations in terms of data? Did we get information across different generations when we collected data from fintechs? So old versus young, that kind of segmentation.
Yeah, no, unfortunately, yeah, the two main differences or key characteristics that drove the differences in the report were based on the level of the economic advancement in the countries and what was the stage of the companies that we were measuring. But unfortunately, we did not get into the depths of the generation that the customers or the companies were serving. Yeah, but that's interesting aspect for a next phase of this report, right?
So Tatiana, just basing off that, is there anything that you can share?
No,
I
just wanted to share that definitely age, if we think about the main social demographic traits that define, customers' preferences, needs, careers, definitely gender is the biggest one, right? Because each of us has a gender, right? But then comes age. And I'd say the third one is location. So with these three, I see these three as kind of the three primary colors. Then you as you combine them, you pretty much get or are able to proxy for any other aspects that also determine financial needs and behaviors. Access to employment, income, literacy, costs associated to accessing services, access to infrastructure. So these three primary ones, age, gender, age, and a location, rural versus urban, primarily, are really key. So this is why I said before that we really need to go towards customer outcomes and really understand the customer and the reality behind the behavior we observe in the financial sector. Let's start with gender, because it's really, as I said, it covers half of the population, but then we should continue, and this has been part of our conversations with authorities, that in many cases the authorities are already disaggregating by age and by location, and certainly in the domain of digital services, older women, are out mostly out of the digital game, right? Because they, it's just harder for them to access and to understand how to use digital channels. So it's an added barrier for them.
Yeah.
Perhaps just to follow up on your point, Tatiana, absolutely. If we think about gendered use of financial services, we certainly see gender differences in the use and uptake of mobile financial services, digital financial services, and smartphones in general. We also see now a growing demand for kind of silver economy financial services. And so, on one hand, there's a focus on youth and how are they consuming and how are they able to tap into digital technologies and financial services through digital technologies, but also what's the suite of services that is now relevant for what in some regions and countries is a rapidly growing silver economy. So that will be a factor.
No, and that's great. And just kind of leading back into the idea about looking at segments between the different age groups, while, as Jorge mentioned, we didn't cover it in our report, there were allusions to it that were coming through from our responses, where we could actually build a whole solution and a business case around silver economy using more of a digital platform, particularly even on the savings, potentially on the insurance side of things, as opposed to the actual lending bit. I know we're almost at time. We have about 4 minutes left. I do want to thank you, Jessica and Tatiana, for this really engaging conversation. I think next time we may be around a table with our coffee mugs and have a real fireside chat, but in a virtual world, I think this was really enlightening for me. I would now like to hand it off to Yasmin Bin Humam, Financial Sector Specialist for CGAP, to provide closing remarks. I'd love to thank the audience for their engaging questions and Haocong for your lovely opening remarks. Thank you. Over to you, Yasmin. And Jorge, of course, for that engaging insights on fintech. We generated so many questions. Over to you, Yasmin.
Thank you so much, Anushe. As you've said, the conversation has been very engaging. I think questions may still be coming in the chat, and perhaps they can be responded to while I make closing remarks, though I'll try to keep it brief. In my capacity advocating for women's financial inclusion for over close to 10 years now through Finequity channels and other CGAP channels, I feel that there have been shifts in how people approach the topic. And practitioners have increasingly become reconciled with the fact that you can't take what's been successful in one context and just transfer it to another context or just scale it, for example. And as digital becomes more prevalent, as digital financial services grow in popularity, and the data trails that they generate proliferate, what we're seeing is a shift in the sector for people to request, gender data so that they can really make informed decisions and, generate bespoke solutions. I love how Jessica put it, of making the invisible visible. And so I just want to use my closing remarks to issue a call for action based on what's been said so far. We know, of course, that women and gender minorities are underserved. We've asked them, and they've told us. And we need to see the numbers to really understand the scale and the nature of the challenge and to identify the solutions. As I've mentioned, the chat had a question about what data goes into well-evidenced business cases. And I think the answer varies depending on business models. But what we can say is that the additional numbers we need beyond demand-side data can only come from financial service providers, including fintechs, who are so uniquely positioned. And of course, gender is not the only factor that shapes people's experiences and needs, nor is it always necessarily the most important factor. But what we do know is that it consistently comes up. And analytics using gender as an initial identifier can then layer on other demographic or economic identifiers and yield insights. We've already seen questions in the chat about youth, about rural areas, and other dynamics like that. So, so the onus is on the financial service providers to generate the data and to use the data for their operations. But at the same time, the onus is also on financial sector regulators. They need to understand systematically the nature of the gender-based exclusions, and it's up to them to reshape the market enablers and reshape provider practices with their policies and regulations. Because as we've seen, regulation as usual is regulation that's biased against women and gender minorities. And gender data will help us overcome that. So in closing, I encourage those listening into this webinar to challenge yourselves, to be open to testing your assumptions on who is using financial services and in what capacity, and also be forward-looking in thinking of who could be using financial services. The questions that were posed in the chat during Jorge's presentations and during the fireside chat, I think are testament to the fact that many of you in the audience are already asking the right questions, and it gives me great hope for progress. So with that, thank you all for joining. And the presentation and slides will be shared afterwards.
Thank you. Thank you, everyone.